Welcome to Making Money. This is Matt McCall. It's May 16, 2023, and we're taking out the binoculars today. We're going to be looking ahead at the second half of this year and beyond. What trends you need to know about that's going to be happening in the second half of the year. Everything from inflation to the emerging markets. Is it time for small caps to break out? And what about these obesity drugs? Is it time for them to really take off? All that and more coming up right now on Making Money. One of the most notorious months in the investing calendar has arrived with a bang. You've likely heard the expression, sell in May and go away. And after all that's happened this week, you may be tempted to act on that. But I can almost guarantee you've never heard of this earth-shattering Wall Street event headed straight for US stocks in less than 60 days. Now, the date is all set. It's coming. 63 funds are actively preparing to send shockwaves for over $10 trillion of American wealth. And you have mere weeks to get ready before a wave of volatility crashes over half of the US stock market. My good friend and brilliant forensic accountant Joel Littman is stepping forward to help you protect yourself. If you have money in IRAs, 401ks, annuities, pension plans, stocks, or bonds, I urge you to give Joel's warning your most serious consideration. It couldn't be more important. Protect your wealth in the weeks ahead. Head to 2023selloff.com now to get his updates. Again, that's 2023selloff.com. Do not miss this. Again, this is Matt McCall. Thanks for joining me. It is May 16th, 2023. And we're going to talk today. We're going to dive right into the crux of the show. And something that I love to do, and I consider myself a bit of a amateur in this, being a futurist. And that's people, and you can see this book over this shoulder, actually, over this shoulder. It's called The Future's Faster Than You Think by Peter Diamandis. One of the greatest books I've ever read, one of the great futurists of our time. He talks about many themes that you want to really concentrate on for the next decade plus. As many of you know, I'm finishing up a book that has a similar tone to it, except for from the investment standpoint, more specifically. And I wanted to take a look at the second half of this year. And myself and my team of analysts, we're always looking ahead. But recently, I kind of delved into a couple themes that I thought were really important and that could be some great investment opportunities for the average investor out there. And I wanted to bring those to light. So I have 5 different themes that I think will be very important for all investors to know. Whether you're looking to buy stocks or you already have stocks or you're looking to get out of certain areas, these are themes that are going to affect your portfolio. And we're going to dive into all 5 of these and break down why they're important. And then from there, mention a couple investment opportunities I think that could arise if these themes do come to fruition. So number one, let's start with inflation. And inflation obviously has been a major theme for about 2 years now. If you go back to June of last year, we peaked out on the CPI, Consumer Price Index, which is one of the numbers that tracks inflation in the United States, peaked at around 9%. The most recent number came in last week for the month of April, and the year over year was 4.9%. So we continue to drop. The month before that was 5%, so we're continuing to go lower. The month over month gain was 0.4%, to give you an idea where we went from March to April. And this to me was good news. I mean, some people are saying, well, it's not falling fast enough. Well, folks, you have to be patient. Things don't just happen overnight. We came from a time of flooding the economy with U.S. dollars, with all types of different shenanigans that went on the Fed, went on the Treasury, that caused inflation. We also had a government-induced shutdown during COVID and sending out money, and that causes inflation. That's just how it works. So it took a while for that to get out of the system, and we're on our way down. So we're on a good path. Will we all get to see a drop immediately? Yes. I do have some good news, though. Last week, they did say prices of milk and eggs are finally starting to come down month over month. So that's good for anybody out there who eats eggs in the morning like I do. I don't drink milk, so I don't care. But I eat my eggs every morning, so that's good to know. However, within that number, I will say there's still some areas that are still hot. We had gas up 3%. We had shelter continues to be very high. Used cars spiked back up this month. And shelter, keep in mind, and I've been saying this for many months, folks, shelter makes up about 1/3 of the CPI. And if we look month over month, shelter was still up 0.4%. same as the overall headline number. Year over year, shelter was still up 8.1%. It's not as bad as it was, but it's still super high. And if you take a look at any numbers from Zillow, Redfin, any other housing associations, you see home prices have been rolling over. Rents have been rolling over. But there's a lagging effect that when those lag, it doesn't hit the CPI until months later. So we're just starting to see that. And I think we're going to start seeing in the next couple of months. And that's really going to bring the CPI down dramatically. So again, we're moving in the right direction. So the theme is if inflation does start coming down, which it is, or continues to come down, I should say, and the Fed does decide to pause and not raise interest rates at the next meeting, what does that mean for your portfolio? Well, after having 10 consecutive hikes, where the Fed raised a total of 5%, 500 basis points, to the highest level in 16 years. Once we start coming down from that, and the Fed pauses and eventually cuts, maybe late this year, maybe early 2024, depending on what happens, that will lead, in my opinion, to stocks in general moving higher. And two areas within it, which I'm going to talk about in a second, which is theme number 2 and theme number 3, are the small caps and the emerging markets. I think will be beneficiaries when the Fed does pause and eventually does cut interest rates again late this year, early next year, is what the consensus is. And I'm not quite sure which one, honestly. It's going to be somewhere late this year, maybe December or early 2024. Depends on the economy. Depends on a lot of things, honestly. And so I was looking at different areas, ways to kind of play this for your portfolio. One is if you have a ton of investments that are tied directly to inflation or highly correlated to inflation, you probably want to get rid of those. I think that's number one. Number two, I saw a great article last week, and it was talking about a Bank of America, B of A report, and it did a study on stocks and looked at their correlation to inflation. So you want to have a negative correlation. So if you have a correlation of 1 to anything, that means you kind of move in lockstep exactly with it. Negative 1 would be if an asset goes up 10%, it means the other one goes down 10%. It's not that perfect, but that's what that beta means. And I went through the list, and the one stock that popped out at me was Amazon, folks, symbol AMZN. According to Bank of America, their correlation to inflation is negative 3.81. So very uncorrelated, extremely, extremely uncorrelated. So, of course, I took a look at Amazon, and it's such a large company. I don't look at it as much. They do some of the small mid caps I look at. I, of course, look at all these stocks, but I brought it up, and I want to show you a chart here really quick of Amazon. As you can see, this is going back to beginning of 2022. It's in a downtrend still, lower highs, lower lows, longer term downtrend. However, you can see on the right-hand side here, it's getting ready to potentially break out. So I looked at this and I thought to myself, wow, this is something that, could be interesting play. And of course, folks, this is a very large company. This isn't just, you can't expect to have huge gains on this, but if it gets back to where it was just a couple of years ago, it was up around 190-ish. It's about 110 right now, 109, 110. That's a big move from here. So, for a company this size, one of the largest companies in the world, it would be a really big move. And then I looked at the fundamentals of it, and really, it's pretty damn attractive. And it does make sense because if inflation comes down, people spend a little more money, things aren't as expensive. Obviously, people use Amazon for anything and everything these days. So it could be potentially a big winner, and it's certainly on my watch list. It's got a forward price of sales of 1.7, forward PE of 43, which is still high. But the growth, folks, you have to look and see this. The estimated earnings per share this year, $1.55, $2.54 next year, $3.63 by 2025. That's enormous bottom line growth, again, for a company of this size. Folks, Amazon is a $1.12 trillion company. So throw that down on your watch list. Again, nothing here in this show is ever a buy or sell recommendation, but just sharing ideas, education with you. And that's what we're trying to do here in today's show. So that's investing theme number 1 for the back half of 2023. Inflation will continue to come down. I mentioned small caps. Small caps is another theme of mine as well. And a few charts that really kind of show you exactly why I believe that it's really important to take a look at small caps right now. And the first one we're going to take a look at here, this is performance right now of VB, which is a Vanguard small cap ETF, a basket of many, over 1,000 small cap stocks, versus the Spiders, SPY, which is the S&P 500, which is obviously large cap companies. As you can see on this chart, this is going back to 2010. Going back to 2010, the spiders, the large guys, have beaten them 374% to 289%. However, the purple line here is the small caps. And the purple line, as you can see, was outperforming for a long time there. And just recently, in the last few years, the large caps have taken over. So we've had a bit of what people term a lot of times, and I'll talk about this in emerging markets, is it's kind of a lost decade. The small caps have really greatly underperformed their larger counterparts. And to me, that is a great opportunity. One more chart I want to show you here. This is going back a little bit further, going back to the 70s, right around when I was born, actually. And this is the Wilshire large cap versus the Wilshire small cap index. And when it's going up, when this line's going up, it means that the large caps are outperforming. Well, that stopped right around the turn of the century, 99, 2000. And for about, 16, 17 years, the small caps outperformed. It turned around as of late. I think we're going back to a time where the small caps, again, historically do outperform the large caps. They have not for years, which to me is creating a very great long-term opportunity. So, of course, the next question likely would be, which small cap stock do I buy? I get that question all the time. What's your favorite stock right now? I got it last night at dinner. And of course, I always laugh because I don't know. There's thousands and thousands of stocks. I don't know what the best one is. Nobody knows what the best one is. I like to build a diversified portfolio. And when it comes to small caps, there's obviously a lot of times more risk because smaller market cap, not as much volume. They move a little bit more higher beta than the larger stocks. I don't want to necessarily call them riskier, but they're definitely more volatile in general. So I don't want to give out any stock name. And again, my subscribers pay a lot of good money for my small cap portfolio that I share with them. But I will say, just looking at VB, which is that index, ETF that tracks a small cap index, that could be a good way to go. And here's a chart of that. You can see it's been going sideways really for about the last almost year. But if I pull out and look at a longer term chart, even longer than this, you can see, over time, there's been pullbacks. And this was obviously the big COVID pullback you can see in 2020. And recently we pulled back. And a long term, there's a ton of support at 170. We're at 183 right now. We tested 170 in 2022. I think personally, pullback on that chart creates a great opportunity in small cap stocks. The next theme I already mentioned as well is emerging markets. I think we honestly had a lost decade in emerging markets. And I think at this point that we are now at a level where there's a lot of opportunity there. I'm going to show you a couple of charts here to kind of give you the big picture of what I'm talking about with the emerging markets. And the first one I'm going to show you here, this is going all the way back to 2003. And the purple line on here is the S&P, again, SPY, the ETF. Since that time, it's outperformed EEM, which is the iShares Emerging Markets ETF, again, made up of over 1,000 stocks. It's outperformed them by about 180% over that time frame. But what I want you to see here, folks, is from 2003 really to 2020, the orange line was on top. And that's the emerging markets. They greatly outperformed. But recently, we've just been kind of going sideways. We really haven't done much with the emerging markets. And really, the S&P, it gave the S&P time to catch up. And then the next chart I want to show you here, this is just since 2009. You can see the SPYs are up 500%, and the emerging market ETFs up 108%. So over the last 10 plus years, it's really gone sideways. Even though it had such a great run beginning of this century, you've really seen an underperformance in emerging markets. And again, I think inflation coming down, I believe that will lead to obviously interest rates coming down, and that will be good for a lot of emerging market economies. Also keep in mind a lot of emerging market economies rely heavily on commodities. I think commodities are poised for several years going forward of outperformance, which will help a lot of these emerging market economies I just mentioned. So yeah, to me, I think that it's a great opportunity. EEM, just to give you an example, tons of stocks in it. It's extremely diversified. The largest weightings in financials, of course, there are emerging market financials, not the ones here. China is the most heavily weighted at 31%. Taiwan comes in at 15, India is at 14, Korea 12, and then down to Brazil at 5. So the top four make up a large portion of this ETF. And as you can decipher by seeing that where they are, it's Asia, it's China and Southeast Asia is where a lot of it's heavily invested. I don't like so much exposure to one region. I'd rather be more diversified. I like to have some more exposure to South America. I'd like to have more exposure to Africa, which, according to MSCI, a lot of those are what they call frontier, not even quite emerging yet. You have frontier markets, emerging markets, developed markets. So a lot of those are still frontier, but your Saudi Arabia is actually the next holding after Brazil, and that's an area that, regardless of political views of Saudi Arabia, whether they're good or bad or ugly, there's some great investment opportunity there as well, in my opinion. So I would look for something that's a little more diversified. But again, for my subscribers, we'll build a portfolio that it's emerging markets facing, that will be built with individual stocks and kind of basically building our own little ETF from different countries, different sectors as well, to really cover everything without getting such a broad stroke with an EEM. But there's a lot of opportunities out there, a lot of funds that track this in many, many different ways. That's a whole story for another time. But just to let you know, there is a lot of investment opportunities when it comes to the emerging markets. The third is farmland. And I've talked about farmland in the past. And when it comes to farmland, I just see huge opportunity personally. I think when we look at farmland, that it just seems neat to own a farm. And maybe I've never been a farmer and I'm not very good at blue collar work, so I'd probably suck at it. But I was on my video call, my weekly call with my therapist, coach, whatever you want to call her. And she was talking about she's looking to buy a farm in upstate New York. And I'm like, man, that's amazing. It'd be nice to just get your hands dirty every day, get out there. But from an investment standpoint is where I really get excited. And if you take a look at the average annual returns from 1992 through 2022, so obviously you're looking at a 30-year time frame. The average annual return of U.S. farmland, 10.71%. The average return of U.S. equities, 9.58%. So it beat it by a little over 1%. And 1% a year, it's actually 1.13% a year over 30 years, makes a big difference in the overall return, folks. It beats real estate, which is 8.39%. It beats U.S. real estate investment trust, 9.43%. Beats U.S. bonds, 4.74%. And then knocks the crap out of gold at 5.42%. So it is the best performer out there. And this is even neater to see. This is the correlation you can see of farmland to other areas. And you can see the correlation between farmland, U.S. stocks is negative 0.55. We already talked about what correlation is. To U.S. bonds is negative 0.94. Real estate, and you think, okay, farmland is considered real estate. It is, but the correlation is only 0.47. To REITs, it's negative 0.04. So basically, it's at zero. Gold, a negative 0.93. So that correlation, or I should say, that lack of correlation to other major assets gives you really immediate diversification to your portfolio. So, and you say to yourself, Matt, well, I can't buy a farm. I can't run a farm. I don't want to do this. And yes, okay, I get that. But what I like to see here, though, is there are ways to do this. Two ways. Really three. One, go buy a farm, which most of you probably won't do unless you already own a farm or been passed down to your family. Two would be, there are for accredited investors, and there might be some for unaccredited investors, ways to buy pieces of farmland. And there's a couple of websites out there. I don't want to promote any of them that do that. Just Google US farmland investing and you'll see that. So there are ways to do that. Obviously, that's not as liquid. It's not like buying and selling a stock. A lot of times we tied up. So obviously do your due diligence and make sure it fits your risk profile, et cetera. But a lot of them I've looked at pay some really nice dividends in the high single digits, which is not bad considering, where interest rates are, even though they're much higher than they were. Still really impressive returns you can get, income plays off farmland. Then there are some couple stocks that out there that, yes, they give you exposure to farmland. And I've talked about a couple of them in the past. But I will tell you, a lot of them just are not performing that well. So I don't want to mention either of them right now, but I do see as a way to diversify, because if we have some volatility later this year, if we start to see election stuff start happening between, they're probably going to start debating in the next several months, way too far in advance. Then it goes all the way through next November, as you know, the presidential election. The Senate's going to be ugly. The Congress is going to be ugly. The House, I mean, everything's going to be ugly. And that may lead to some really crazy volatility. And maybe something like this will make you sleep better at night. So I want to throw that in there because I think that's not only is farmland, I think, going to be something people talk about as volatility remains high and going forward. And they have talked about during inflationary times, but it's something that's going to be around, obviously, forever. It's been around forever, and it's going to be around forever. And it's going to be more of a really true investment asset class for the average person, I believe, going forward. There'll be more opportunities for that. The last one we're going to take a look at here is what I call the fight against obesity. We all know obesity is a major, major, major issue in the United States. Whether you're obese, whether you have family members or friends that are obese, whether you just open your eyes when you go to an airport, we have a problem. It's based off food, sedentary lifestyle. It's a million different things. And the unfortunate thing is it leads to a bevy of health issues, from diabetes to heart, you name it. I mean, it is a killer. It is an absolute killer. So recently, we've had this big kind of resurgence of people talking about obesity and how important it is. And a lot of it has to do with Hollywood. And as much as I think Hollywood's a bunch of jokers, a lot of stuff happens first in Hollywood, and because they have the platform to get up there and get on a soapbox, and they all look skinny and want to look good, and find out they're taking these different pills. There's Wegovy, which is basically a diabetes drug, obesity drug. Ozempic, which is a drug for diabetes. Both those stocks are under Novo Nordisk. I'll show you the chart here in a minute. Eli Lilly has a drug out there for its diabetes drug called Mounjaro, and they're looking to kind of get that passed by the end of the year by the FDA to have an indication for weight loss. So these drugs all help greatly with people losing weight. I don't know if we know the long-term effects of it. And again, I'm not a doctor, and so don't take any medical advice from me. Don't go do this because I'm saying this at all. Please do not. Always talk to your doctor. But because of the spread through social media and through the regular media and for friends and family and whisper down the alley, whatever, more people know about these drugs and more people are considering it. I've had so many different meetings where people talk about it. If we take a look at the numbers, and this is where it becomes interesting, folks. Right now, the obesity area has about $2.4 billion value, that category. And this way, it could potentially be pushed up here to about $10 billion. This is according to IQVIA Holdings, which is a publicly traded company. They do numbers by 2027. And they're actually saying right now, they say it's about 1.9 right now is what they say, 1.9 billion in 2022 heading into this year. And it will go up to 10 billion, which would be a gain of 378% growth from 2023 to 2027. That is for spending on obesity drugs. That is a huge number. Morgan Stanley came out and they believe that the global obesity sales globally could reach $54 billion by 2023. And the two stocks that they mentioned, Eli Lilly and Novo Nordisk, which we're going to take a look here in a minute. But any way you look at this, people believe, and when I say people, analysts that I actually believe in. And again, this is the eye test. You see it, you feel it. Man, oh man, it's happening everywhere. Unless something comes out and says these drugs are harmful for you. But of course, they've been used for other things in the past. So I don't see that coming out and being an issue. So again, they've been approved for other things and are approved, some of them already, for obesity, such as Wegovy through Novo. This is a huge potential investment idea. And again, if Eli Lilly gets approval for Mounjaro by the end of the year, which everybody's expecting they will, and if it's positive from the FDA and they get the approval for use of indication of weight loss, obesity, you're going to see, man, oh man, even more and more money is being spent. So let's take a look at these stocks here real quick. We're going to take a look at Novo Nordisk, European company, trades here in the US. Here it is. NVO is a symbol. I mean, you can see, obviously, a lot has been priced in. I mean, the chart, the stock's gone from $95 in September up to $168 right now. This stock has been on my watch list, I will not lie, for probably well over a decade. I may have owned it here or there a little bit, but look at this chart, folks. At the turn of the century, Novo Nordisk was down around $2.50 a share. It's at 168 right now. So this has been a huge winner. But again, this is a blockbuster potential for weight loss. So I believe that we could see Novo Nordisk even move higher than this. And the other one that I mentioned is Eli Lilly. Again, a great looking chart, breaking out. And again, let's take a look at the long term of this as well. You go back to the turn of the century, it's on $60. Now it's at $4.34. Got down into the 30s during the 08, 09 great financial crisis. But man, oh man, I mean, two just amazing looking charts, folks. And I got to tell you, I mean, yeah, I don't own these, so I can't say I picked these or anything. But you look at just investing in solid long-term healthcare companies, and these are the type of returns you're going to get. You'll have times where it goes sideways. You'll have times where they go down, but you're in solid companies. And these are already obviously large companies, so you're not going to see the same gains we saw over the last 20 years, in my opinion. But I do think that there is great upside. And this is a story, again, that's really going to hit the mainstream by the end of this year. So this is something you want to keep an eye on. Two stocks you're going to keep an eye on. And I will say, I'm not going to share, but you do some of your own research as well, because they're smaller stocks. There's some small biotechs that have FDA applications for similar drugs that, because they're smaller, if they get approval, look out. You're going to have returns like we've seen over the last 20 years with Lilly and Novo Nordisk over the last 2 decades. All right, folks, I hope you enjoyed it. But again, real quick, inflation, small caps, emerging markets, farmland, and the fight against obesity. 5 trends that I think are going to be really hot the second half of this year and beyond. Thank you so much for watching. Don't forget to comment, like, share down below. And again, I hope you learned something today. I hope you had some fun. And of course, you make some money off it. Again, thanks for watching. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.